Let's kick this baby off. Let's get to our picks because I want to know what business you're going to be a proprietor of now that you're
Honestly,
picking it.
not looking forward to this moment where Marcos has his day in the sun. Obviously, you won because your picks, you knew what the market was going to do. You didn't just guess. You didn't just put your finger to the wind. You knew. So now that people want to know what you're going to call for 2026.
I know I've been getting a lot of tweets and texts and all the things.
So welcome, people, to 2026, the year of Marcos's predictions being accurate. That was 2025, but 2026 could be the same thing. So it is now January 13th. Brett Horowitz here, along with Marcos Segrera. I have to start off by saying, Marcos, that I have to give you kudos because most of your picks were, while not spot on, were closer than mine. And so you ran away with things. We're going to go through the picks in a little bit of order, talk about why they worked, why they didn't, talk about what we have in prediction for this year, and boom, in and out. Anything you want to say as the victor?
I will say, as I said earlier, I wish I cared a little more. This is a crapshoot, but it is fun. And yes, ultimately in 2025, I was less wrong than you were. All right, go over the picks. You do go through them.
Okay, number one, dogs of the Dow for 2025. Again, these were the 10 stocks in the Dow Jones that have the highest dividend yields. The thought is that the dogs would then go forward doing really, really well because they have a high dividend relative to the price, which means the price is low, dividend is high. So these had the best chances of maybe making a rebound. I picked P&G, Procter& Gamble. I still have their spray here, which I will not spray now because it's horrible. You picked McDonald's.
Yes.
It was very close. McDonald's was up 7.9%. P&G was down 12.25%.
That's terrible. So bad. Excuse me, for the record, the Dow was up, I think, 14% total return. So McDonald's still underperformed the index.
Well, there was a day in mid-March where one day, if you look at the chart that we have here, there was one day in March where if one day to the next, our picks were very similar in their returns. So that's about the only positive thing I can say is if we use different dates, they have a very similar number at that one day. So you won the pick for 2025, and now let's move to 2026. What is your dog of the Dow prediction?
Okay, so my dog in the Dow. I guess first let's say who the dogs are, right? Where is that?
You've got Verizon, Chevron,
Yeah.
Merck, Procter& Gamble, Coca-Cola, United Health, Home Depot, Nike, Johnson & Johnson, and Amgen are your choices.
Yeah. So I'm going GLP-1s for the win, and I'm going to pick Amgen. Amgen has it's called Maritide. It's an obesity catalyst drug, and their claim to fame is that, like Wegovy right now requires a weekly injection. Maritide is looking for a quarterly injection. That would be a game-changing event. So I'm gonna ride the Maritide, nice, and go with Amgen.
Okay. I mean, you're not going to get me any of those injections so that you skew the results, are you? Just like you got me McDonald's?
There, check your top drawer.
I am going to go. I mean, that probably was the difference between why our stocks performed the way they did, honestly. That one meal you got at the beginning of the year.
I got a lot of stuff, yeah.
I'm going to go with Nike. Steve Folds is going to love this one. What we've seen over the last year is it's been the year of the K curve, where those in the upper class are doing well, those that are in the lower class are not doing as well. I'm going to continue with that theme and go with a retailer that's more discretionary. I tried to go with P&G thinking everybody's going to need P&G and the market's going to not do well. That did not work out, so I'm going to do the opposite this year and say the wealthy are going to keep buying Nike and the middle class will keep buying these expensive shoes, and Nike is going to do great in 2026.
Okay, fair. Yeah, it's had a rough last few years.
Roof is correct. Recession was the only one that I got right. I said no recession in 2025. You said yes. The GDP numbers in the 4 quarters were minus 0.5 for Q1, positive 3.8 in Q2, positive 4.3 in Q3, and a positive 5.1 projected in Q4. So not even close to having a recession. One more quarter, you would have had it, but the rest of the 3 quarters were really, really strong.
Yeah, they were.
And you said you went with the recession just to be different than me. What is your call now for 2026, or do you want to hear what I say first?
It's not going to matter. I'm saying no recession, and I'm also going to further say that there's a 99% chance that we print 6% GDP growth because of productivity. And that's crazy in a capitalist society that is that's as developed as we are. So it's pretty incredible.
Well, I think it's what a lot of people expected when Trump got into office the second time, right? That he would not get in the way of business, that he'd help and try to drive rules and regulations down, that he would lower taxes, anything that he could do to try to drive productivity and drive up GDP. We've seen some pretty impressive figures. I think Q2 was a reversion of Q1 where you had an import-export imbalance, but other than that, it's been much stronger than a lot of people would have expected going into the year. But
And margins are really driving that. If you look at the S&P. Okay, so what do you got? It sounds like you're.
no recession.
Yeah, this is I don't know. It'd be hard to call these things. Anyways, yeah, we might want to edit this prediction for 2027, maybe change the question, but for now, we're both saying no recession. And I think there's a good chance we see a 6 handle on a GDP print, which is awesome.
That'd be
Um,
impressive.
it would be. US versus foreign, what do you got?
So we both picked US and we were both wrong. Way wrong. The S&P was up almost 18% last year. Great year. But foreign, as represented by the MSCI Europe Asia Far East Index, was up 31.3%. Wow. What contributed to that?
US dollar.
Was a lot of it. Yeah.
The US dollar. And valuations, right? It was due.
Yeah, I mean, I think US, anyone would take that all day long. Interesting factoid that I just saw the other day. It said, should the S&P rise in 2026, it'd be the fourth consecutive year, the longest streak since 2007, when the benchmark was up 5 years in a row. In the index's history of the S&P 500, again, not the Dow that you hate, that you love, the S&P, there have only been 5 streaks of 4 more consecutive years. Wow. This could be the start of something beautiful, the end of something beautiful.
These things don't die of old age, man. I think your average bull market is like 68 months long. We're 38 months in or whatever. Give me 30 more months. Yeah, I'm in. I have my prediction. Why would you like to go first?
Sure. I will go with four and some more.
Yeah, I'm going foreign also, unfortunately. Maybe we should set a line above 10% or below 10% or maybe 15, 12 and a half.
As the delta between the two?
Yeah, like let's see who can get closer to the mark.
Foreign by 5%.
Hmm.
Over under.
Exactly. I know. I'll go under. You gotta write this down. Hold on, I gotta write this down. Okay.
Okay, U.S. Treasury, if we were doing prices right rules, you'd be over, but you were closer by a smidge. Man, this was close. So we thought the Treasury would end the year, I said 3.6, you said 4.6. It ended 4.16, almost right in the middle, but you were technically a little bit closer. I think this surprised a lot of people. I know a lot of our clients are always thinking that the Federal Reserve is lowering rates, that's going to lower the 10-year, but that's not the case. The 10-year is more correlated to how the economy is doing, how inflation is doing. And so while the lower part of the yield curve has come down, the higher end has actually gone up the last few months. So you had predicted 4.6. Why? Why'd you predict such a high number? You remember?
Well, yeah, starting yields for the 10-year, just to kind of go back to it. So when we were in January, we were sitting at 4.6, 4.7. We were walking into 4.7, right? So I basically said we wouldn't be moving much from where we were. And we just saw the 10-year come down. It kind of traded even off of the 4.6, 4.4 bound until summer. And then it kind of slowly ratcheted down from there. And I think that's all those reasonable-ish inflation prints. Because for me, the only risk that we get that kind of derail what you might want to call the roaring 2020s is kind of a melt up or melt down scenario where the excessive rate cuts lead to unsustainable asset bubble type thing. And then bond vigilantes, as the market likes to call them, reacting to overstimulated fiscal policy, right? Because that'll weaken real wages, and that's usually an inflation fear. If that doesn't happen, I think the party continues. So I basically thought we kind of stay range bound. Last year, I didn't think it'd come down as much. And this year, hold on, what did I write down? I want to get the one I wrote down. I'm going to go with 4.25 on the 10-year.
Okay. So I thought rates would come down quite a bit as seen by my 3.6. At one point we were just barely above 4. I think there was a lot of talk of are we going to drop below 4? It never happened. So I don't think we're going to drop below 4. I'll go with 405. Barely above 4. But I'm holding the line. It will not drop below 4.
Okay, that's fine. We were getting to that 4.39 beginning of April. Then tariffs. Everyone's like, oh my gosh, inflation. And guess what? Everyone's still waiting. And tariffs are not inflationary. Sorry.
Well, they haven't been as bad as we thought. There have been a lot of exceptions. A lot of companies have figured out a way to get around them.
Okay. I think the Bitcoin prediction we can honestly kill. Your call.
Well, I really want to root for Bitcoin at 500,000. That way I can see it do the opposite, because whatever I predict, it doesn't listen to me.
That is fair.
This year I went super bullish at 200,000. You went with 150. It ended the year at 87,824. My new prediction is 500 grand, hoping that makes it down to 50 grand.
Okay, we're scrapping this one. 500K is the last prediction we're ever going to make on Bitcoin. That's Brett's price target.
People want to talk about it, Marcos. I mean, why did it go down? Why did it not go to 200K or 150? I have no idea. Neither do you. It just seems to have
No, the only thing I found interesting is how it kind of gapped away from trading with the NASDAQ. If you look at like a 5-year chart, it almost tracks NASDAQ like right along at the hip, and it gapped away toward the end of the year. So we'll see.
It's always done well when the market was doing well, but in the last few months, yeah, like you said, that's not happening.
Yeah, the listener wants us to start predicting the price of gold, not the price of Bitcoin.
Well, that might be
Right,
the
yeah.
asset class of the year. Hold on.
Go, asset class of the year. What do you got?
So last year, I was right up through March and then wrong the rest of the year. So I picked intermediate term bonds. They had a really nice run. They ended up 7% for the the iShares US Aggregate Index. I'll take 7% on a bond index all day long. You went with large cap stocks, which killed it, which we saw before was up 18%. But the big winner in 2025 was gold, which was up 63.7%. Wow. One other fact that I found really surprising, as well as the year went for U.S. stocks and for your victory there. As of December 15th, I want you to guess how many of the 500 stocks in the S&P were actually down.
Oh, breadth increased. So let's go 15%.
183 or 37% of stocks as of December 15th when I saw the stat were actually down. And yet the market had such a phenomenal year. So that shows you do not buy individual stocks, Mr. and Mrs. Client. That's not the way to win.
It's a way to win big. Yeah, I know. Concentration is everything until it isn't. Yeah, by the haystack. I like that. So, asset class of the year for me, I'm going small mid caps. SMIDs, my friend, SMIDs. I think SMIDs will rebound because I'm hopeful, and you saw a little bit of this. Mag 7s performed poorly in the past few months, while the rest of the 493 have not. So I think the AI productivity gains and margins will hopefully spread across their small mid-cap companies, and hopefully we get some downward pressure on rates, which is helpful for small and mid-cap companies who are generally more indebted than large-cap companies. So small mid-caps for me.
So this is small mid-cap blend, core, right? You're not taking the value or growth.
Yeah, exactly. We'll see how we'll measure it however it benefits me a year from now.
I like that. Yeah, great.
I know. All right, let's do it.
I will take, ready for this, emerging markets. I've already gone in on the international. I think emerging markets, they do well when foreign tends to do well. They're usually bull or bust, all or nothing. I think if I'm going in on international, I'm going all in and saying emerging markets going to carry me this year. Big victory.
Okay. All right. Final one, the fun one. S&P. I'm going to tell you my whole thing right now. Let me give you my whole thing real fast.
Let's talk about how you won this victory first before you go into 2026.
Oh, yeah, of course. I won. I don't even remember why I picked that number. It was probably 10%.
I predicted 6240. You predicted 67200. So our middle point was 6700, and the S&P was 6845. Just barely above that. Barely above that.
All right, but I won. Thank you. All right, I am going with 7,700. Current price levels around 7,069, 66, something like that. So basically, I'm suggesting a 10.5% price gain with a 1.5 dividend yield. So we're looking at around 12% total return. 12% has only been hit in the S&P 500 over the last 75 years, I think 3 or 4 times. So I'm going to go, it'll happen for the 5th time. That's earnings at about 310 per share.
So I hope you're right. I read the other day that of 25 economists surveyed by, I forget which news reporter, all 25 economists had the S&P up in 2026. So the fact that no one predicts a negative is really nerve-wracking for me. These are the same people that in April of last year said how bad we're going to have a recession after the tariffs, and then revised and revised and revised their marks throughout the year. So I'm not sure why I believe anything they have to say. I will go positive on the S&P, but I'm going to go up a lot less. I'm going to give it a 5% return.
Okay.
So that puts us at 71.87. So you're higher there and I'm lower? We'll see.
Yeah. Don't worry, over the next 10 years, S&P is going to give you 3% annualized. So eventually we're going to get an absolute shellacking. We'll see. I'm going to be a roaring 2020s guy. You're 71.87. I'm 7,700. May the best man win.
I'm like meh for 2026, but I will say, I hope that you are right in the fact that the 3% is a little bit lower than we would expect, but at least it's sort of normal because we've had such great years. I don't want to see a negative 50 somewhere in there to get us to that average of 3%. Like, that is little small returns, but nothing spectacular, and I'll be happy.
Yeah, that would be wonderful. We didn't get that.
All right. Have a good one, Marcos.
You too, my friend. May your predictions be ever in your favor.
May you not win another year in a row so I don't have to hear about it. See ya.